Vari is down about 5%. And KPIT saw a big move yesterday. It's coming in for some bit of decline in today's trading session so far, down about 4%. On the way up, we have Balkrishna Industries up nearly 9%. IFL Finance does well with about a 3.5% gain as well. And movers from yesterday that continue into today as well. Thangamayil Jewelry was down about 10% in yesterday's trading session. Opens 10% lower this morning as well. Reddington, good numbers coming in. That stock up 15% straight off the bats. And SML Mahindra, yesterday, the restructuring of the Mahindra Group with the truck and buses business going into SML Mahindra took that stock higher by 20% by the end of trade. And this morning itself, it's up around 15%. So a bunch of stocks moving in the broader markets in opposite directions, led either by news or by numbers.
Well, that's right, Mangala. Reddington, it's actually a blockbuster quarter that they're saying. They've shifted the product mix from low-margin distribution business to the high-margin AI services business. That's what's helped them, and that's why that stock is flying away. A couple of words with regard to Balkrishna Industries as well. The reason that the stock is running away is because they have reported the highest quarterly tonnage. That's what's led to a beat on all parameters, revenue, EBITDA as well, and the volume growth is seen across India, Europe, as well as the United States. Star Health, that's the other stock in there. It's popped up in trade. I know from the top it's been a relative underperformer, but this morning it's getting an applause actually from the bulls because underwriting as well as the operating parameters, that's what's aided the net profit beat out there. Though from the top we are seeing some kind of supply because the stock has already recovered considerably from the recent low. Tractors India, yesterday, recall, the stock was around 215 rupees. And just as the market started, we had highlighted that there was a large trade that took place. There's an influential name that's come in there and, picked up that stake. So from yesterday at around 215 rupees, the stock has already moved to around 270 rupees. So that's why it's not running away in trade today. On the downside, the big reaction you're seeing is KPIT Technologies. That stock has come in for a bit of a knock. It's pulling back yesterday's gains that we saw. Equus, that's down close to around 4%. We'll try to get in the management in a bit from here on. And Lakshmi Organic, I noticed that stock in the last 1 month was up close to 25%. Now, this morning, the stock actually is giving up post the results. So it's down close to around 4% as we speak, as is the case with PCBL as well, down 3.5%. Another stock that rallied more than 10% ahead of its numbers. The stock Mangala we just covered, Vedanta Iron and Steel, that opens up with a gain of around 2.5%. So the street likes it. But the vision ahead is important. And as all three of us did a quick market check, the markets have moved into the green.
Yeah. Just one point on MTAR Tech. The stock has been on a lower circuit trend for the last many trading sessions. This morning, Ria said the numbers are good. Management's maintained the guidance. It's opened about 2.5% higher. Let's see from the top whether we see some selling or whether this marks the end of the decline that we've been seeing in the stock over the last month.
Yeah, no, absolutely. And I think, that's something we've discussed here yesterday and today. One-way sell-off on this one, MTAR Tech. I mean, they are into all the right hot button areas, right? I mean, they're into power, which is, the AI-led power electrification theme they provide to nuclear power corporations. So there's a nuclear bid. They're associated with the space program. So it's like this one, business with exposure to all three. But the stock was trading at 150, 160 times earnings at one point in time. Not anymore. 10-point change at this stage is what you have. Car trade is down about 4%. Again, it's had a phenomenal run lately. Hexaware, again, results came through, is down 7%. And there is Timex, which is down about 4.5–5% as well. So some volumes in it, not much, but volume's not completely lacking here. KPIT, of course. KPIT has gone the other way, right? Yesterday, finally, it started slow. There was a call, and the stock went up 5–6%. It's giving them back all of it this morning, KPIT. And Vari Energy is the biggest volume-led loser right now. It's down about 6% at this stage. All right, let's bring in Amish Shah, who's head of India research at BofA Global Research. Back after a while. Amish, great to have you with us here. Thanks very much for joining us. I saw your note from a few weeks ago, just kind of sort of outlining everything from a macro and micro standpoint, reforms and everything else which the government has done. And it was kind of a report which took stock of where we were, but I think we've moved on quite a bit since, right? Just because of the global environment. There is a big unwind of this high pressure, high charge momentum, AI trade. Earnings are coming through and earnings growth is tracking very, very healthy if you look at it. So just wanted to, in that sense, ask you to market your views to where we are now.
Absolutely, Prashant. So I completely agree with everything that you said. And as a result, we've changed our views as well. And so the markets have gone nowhere. But you would recollect that, we turned cautious on the markets or bearish on the markets 2 years back, or almost exactly 2 years back. Since then, we now think that the risk reward for the markets are more balanced. In our base case, we are arguing that from current levels, in the next 5 months till the end of this year, Nifty can return 9% upside. In a bear case, we also think that there can be 8% downside if all the risks were to play out as the markets are debating. But our bias is more favorable. We do think that the probability that the base case 9% works out is much higher in comparison to the bear case that we argue.
So you're still sticking with the 9% kind of upside level, right?
Absolutely, Prashant. So unchanged price target. We are still arguing for Nifty at 26,200 by the end of this calendar, which offers 9% upside. Yes.
Okay. Just your coverage universe and what you're seeing as far as earnings go, is there earnings numbers are good point to point, but is there an earnings acceleration that you see from here? Because the market will try to price in what's coming, not what's already in the bag. Of course, that will also happen on earnings day. But is there a general trend of acceleration in your coverage universe based on what you've heard from companies and what you've seen?
Short answer is yes. So if you look at it, FY24 is when Nifty gave 18% earnings growth. 25 and 26 was 5 to 7%. And now we are arguing that it will accelerate to 10%. We are still lower than the consensus at 13, but 10 is still a meaningful acceleration from where we were before. Same goes for the mid caps. So the small and mid caps had a 1400 basis points extra earnings growth over Nifty between FY21 to 24. That number shrank to zero during 24 to 26. We are now arguing that over 26 to 28, small and mid caps earnings growth premium over Nifty is again going to accelerate to 817 basis points.
Okay, all right. Hi, Amish. Good to see you, Win. Take your view on board. Amish, the other big burning debate is whether or not the FIs are back for good. You don't seem so confident, right, in this sort of a scenario where the dollar index is showing strength, when the yields as well are spiking up. You believe that this current trickle of inflows that we're seeing from the FIs, I'll tell you what, personally, what we're celebrating is at least they're not selling as big as they were in the last 5 months. And in July, they've turned mild buyers. But you're not confident that this trend sustains? Tell us why?
Nigel, as you said, that the correlation is a perfect negative correlation to the US bond yields versus EM flows, not just India, but emerging market flows. So in an environment where your 5-year US Treasury is at 4.4, 10-year is almost close to 4.7, and 30-year is 5.2, it's an environment of a risk off. And it's very hard, therefore, to get flows for emerging markets. So we do think that the pace of outflows of FIIs is going to moderate because they've already sold a lot. But we are not in the camp of seeing big FII inflows yet. But the 9% returns that I spoke about is factoring in the fact that FII outflows will continue even at a moderate pace. If indeed FII flows were to turn positive, that's an upside case to our 9% number.
Right. Amish, you turned cautious in the market in August 2024, timed that perfectly. It seems that way. And now you've turned positive. So obviously the street will take your view with a lot of importance. 9 to 10% upside is what you're seeing as your base case on the Nifty right now. What do you think will lead to this upside? Because the banking pack is a consensus buy. IT, while this is a consensus sell, a lot of people are now getting positive with the kind of revival that we've seen from lows. And then you have the capital goods segment as well. So across the board, what do you think will lead the gains that you're seeing on the Nifty?
So Mangal, both top-down and bottom-up factors. So from a top-down perspective, as we were discussing, that the economy as well as the corporate earnings has shown a very good resilience. That's reflected in a variety of high-frequency indicators like GST tax collections, direct taxes, auto sales, power demand, so on and so forth. So there are a variety of macro factors that are encouraging. on a bottom-up basis, clearly the first quarter, which was the middle of the West Asia crisis quarter, we are currently run rating at 12% earnings growth, which is definitely a handsome beat. So I do think that top-down, bottom-up both adds up. Going on to sectors, we do think that you have two pockets of opportunities. One where sectors or stocks offer value, and in that basket, I would argue you could have financials, you could have regulated power and gas utilities. You could also have upstream energy. So all of this is a value basket as we see it. And then there are options for growth or sectors that give you high visibility of growth. So even if the valuations there are a bit expensive, markets will continue to chase growth. And that's a longer list. So you have autos, you have jewelry, internet, non-ferrous metals like aluminum. So now, and small and mid caps that we were discussing, some of them are good bottom-up opportunities. So I think markets would probably do well on the back of chasing stocks that offer high growth and some that offer value.
All right. Amish, what about the other one? The top sector of the day, the top sector of the last 1 week, and the top sector of the last 1 month. Let's stop it at that, because if you widen the time horizon, then it's been a relative underperformer. How are you all placed on tech? Initially there was that big fear with regard to the AI trade. Now suddenly this anti-AI trade is coming back. The under-ownership is being talked about. Valuation support is being talked about. Flash in the pan, or do you think it can get its act together? Your view, and how would you approach this space, large and mid-cap names?
So Nigel, structurally we are still not very optimistic on tech, but recently we have upgraded it from an underweight to a neutral, specifically on the back of anti-AI trade. That if they were selling off when AI was doing very well, then if AI is not doing well, conversely, then tech should at least rebound, even if tactically. So we think that tactically it will do well, but the moment the valuations from currently 14 odd times goes to 16 and a half times, we think that the sector is likely to start underperforming again, because the worries or the structural worries on AI disruption continues to be out there. Large cap versus mid caps IT, we still think that the growth is much better in the small mid cap IT. So relatively we prefer that over the large cap, but within large cap also we have a preference of one over the other.
Right. And in the SMID, which you believe will continue to trade at a premium, are there any particular pockets that you like? I mean, we've seen themes that play out fairly well. Power equipment was one of the themes that did well. Renewable is something the other that did well. And then we did see a surge in defense as well. Any particular theme in the SMID space that you like?
So pockets of opportunities, I would not generalize it as per sectors, but, we find some of the financials and broader financials, including exchanges, brokerages, some of those exciting. We find a lot of consumer discretionary, including internet and autos, exciting. Some of the travel tourism themes we still find exciting. So these are some of the big pockets, but most of the other pockets that you spoke about, we think are now going to languish. So defense, we think very strong thematic, but including the valuations now, we think that defense is now going to be sideways. Real estate, tactically we think has done very well recently. Now it's likely to be sideways. Renewables, we think markets are chasing growth, but it is not profitable growth. Most of the renewable developers make single-digit ROEs. So when the market starts focusing on returns, we think that renewable developer particularly are not going to make that much good stock returns anymore.
I got that. Fair enough. Got it. Amish, last time you were on, and correct me if I'm wrong, we did talk about this entire one of the themes you outlined, right? Was energy and energy transition, right? As a core theme, which perhaps continues to play out in a big way. I mean, we've seen, at least at a ground level, policy level, E20, higher flex vehicles, etc., all of that is playing out. What do you have coverage published on in that space, and what are the best ideas there?
So absolutely continue to like that theme, Prashant. We think that can be like a multi-year, perhaps a multi-decade theme. So within that, we are currently positive on power financing companies, positive on the power regulated power developers. We are positive on cables, but we are not so positive on the power gensets. We are not so much positive on the power transformers anymore. So again, some like, some dislike, but we continue to believe in that theme.
So power financiers, so REC and PFC, and those are better ways to get exposure, Amish. And maybe others.
Power financiers offer more value. Same goes with regulated power utilities. They are more value, whereas the transformers and gensets, etc., are now very expensive valuations.
I see. Do you? What's the view of the global team, Amish, on whether the correction in US is in the semiconductor space is just a pullback, healthy pullback? We had Ed Yardini, who's a veteran, in the morning, who said, "Well, if you've got the stomach for it, it's the time to step in." I don't know what the global team is saying at BofA.
So the global views are that AI capex continues. Clearly, the argument or debate on returns on that capex is a very valid argument. More importantly, right now, the big macro call that we have is that for every next Fed meet, we will have a rate hike. So we are arguing for a 75 basis points of rate hike. That obviously in the near term is not so much positive for the AI-linked stocks. But otherwise, from an AI capex perspective, the views are that it will continue.
Okay, all right. Thanks very much, Amish, for that. And we will speak again soon, and sort of, once again get your views on what's happening. I think we'll have a better sense of, a wholesome sense of earnings as well. This is the heaviest part of the earnings season. Some of the, used to happen in the past that some of the weaker numbers would be reporting later. So the composition so far is strong. Will that change? We'll wait for it. Let's just get on with the next conversation, and we have the Prestige management with us. Reported perhaps a muted set of numbers, if you want to call it that. Pre-sales fell sequentially and on a year-on-year basis as well. We have Irfan Razak, Chairman and Managing Director at Prestige Group, with us. Mr. Razak, good morning. Great to have you with us here on the program. Thanks very much for joining us. Could you start by telling us what happened, sir? What's the reason for the decline? And, your guide is 20% pre-sales growth for 27. Will you be sticking to it, sir?
Good morning. Yes, we certainly will stick to it. And I think the first quarter has done well, considering that we had only one launch, and that too in Hyderabad. So it's a matter of what we call the overall launches that we do. Like in the previous quarter last year, we did a launch in NCR, that is the Prestige City, Indrapuram. That's where the numbers got bumped up. And this quarter, we did do a large launch in Hyderabad, the Prestige Golden Grove, which did extremely well. But in spite of that, the numbers are different. And that I do believe that we've got 3 more quarters, and there are a lot more stock that is to come once the approvals are in place. And I'm very, very sure the teams are working hard to see that they'll exceed the guidance that they have already set out for.
Mr. Razak, we had Lodha with us, predominantly Mumbai-based player 2 days back. And there also, the pure residential sales, excluding land sales, etc., fell. And we asked them, well, what happened? They said, well, we consciously did not launch new projects. I mean, just calibrating our launches in that sense. In your case, this was more approvals related, or this was, a decision to hold back?
No, as a rule, we don't hold back anything at all. As the product gets approved and as we get the RERA, we launch, and we actually are struggling to have more inventory. And I believe that we've always met with success, and there is demand on ground because we are in several markets, and all these markets, whichever we are present in, are doing well.
You said there was one launch in Hyderabad. That's been a big contributor. What geographies will drive growth in FY27, Mr. Razak? I ask you because, while Hyderabad and the other places, there are launches, there is a lot of competition that is there in NCR as well. We heard Oberoi launch a project out there that did extremely well. And they had to put a stop on the sales immediately, saying that this next phase will come by at a much higher price. So just wanted your thoughts on competition in these micro markets and what geographies will lead growth for you.
I think there is competition in all markets. It all depends on your product, the brand that you have, and the type of location and the pricing that you come up with. And we are very confident that wherever we are, our customers are loyal to us and they have that belief in the company. And I'm very sure that whenever we launch, and that's why even Hyderabad people were a little skeptical, but we did a good product and a good launch, and that met with extremely good response. And that's where we are enthused. And I believe even Mumbai, or for that matter, Bangalore and NCR, all of them will do well once we bring in the product. We are trying hard. I think Bangalore this quarter should have at least 3 to 4 launches. Mumbai should have 1. And similarly, NCR may not happen this quarter, but for sure next quarter we'll have a couple of launches.
What would the GDV, or gross development value, of the entire launch pipeline this financial year be for you? And if you could also throw some light on collections, will that grow in line?
See, now the last quarter, even though the overall sales dipped, the collections went up. And last quarter, we had collections of 4,800 crores, which is pretty substantial. And I do believe as we keep launching, the collection also will go up. And there's quite a positive view on that. And our overall collection for the year should exceed more than 20,000 crores.
Collection should exceed more than 20,000 crores. And the GDV of the launch pipeline would be what, sir?
Around 60,000 crores is what we are looking to. And we have that inventory. It's just that the teams are working hard in various geographies to see that the planning is done and the approvals come in with the RERA so that we can bring it to the market. And as I said in the beginning, we don't hold back. As soon as the product is ready for launch, we just bring it in and we meet the success.
How much of this will be from NCR? You said next quarter, a couple of launches, right?
Yes, we've got already planned and ready, which is, we've been working for some time, is that Prestige Bougainville in Sector 150. Now that is behind us. The master plan has been approved. We are just waiting for the building plans to come in. And that should be a big launch for us in Noida. And then the other one is we've got the Prestige Meadows in Sector 92 in Gurgaon. Even that also, I think, is work in progress in terms of getting the approvals. And I think that also should come in the next quarter.
I see. Lots of other players, right? I mean, you a couple of years back were relatively new in NCR. I mean, actually, you're still new in NCR. But there are others who've come after you as well. These are big players, right? With deep pockets and good brands. And a few years back, there used to be a premium for, because of the big bust out which happened 10 years, 12 years, 15 years back, there weren't that many big, branded players except maybe a DLF, a Max, etc. But now there are many. Will that change the market in any sense? Pricing, what you're able to command as more pile into that market?
I think price is a function of location. Price is a function of the type of product that you bring in, and also what the market can sort of support. And one thing that as a company, as a rule, we've done is we've never undersold our product and nor created a disruption. We believe that there has to be a level playing field, and we will price our product according to what the market demands. And there is belief that Prestige has the capacity to deliver, because I believe delivery is the key, and we keep delivering. Yes, there could be some blip here and there because of labor issues. Like in the last 2 quarters ago, we had a huge labor issue because of the elections in Assam and Bengal. And that actually had a sort of a big stress point for us for at least a quarter. But now that's behind us. But that's part of real estate that goes on. And I think customers do understand a month here or two up or down. But the thing is, the delivery comes, and delivery comes as promised.
Right, take that point. Thanks a lot, Mr. Razak. Always a pleasure speaking with you. The first quarter obviously was soft given the nature of and the number of launches that happened, but you are projecting a strong performance in the remainder of this 9 months, make up for the shortfall in the first quarter, 60,000 crore worth gross development value to be launched over the next 9 months. No problems with regards to geography as well diversified. With that, we take a short break, come back. On the other side, the management of Sirma SGS joins in to discuss their first quarter numbers and the road ahead. Stay with us.
Welcome back. Well, let's get straight to the next management. Sirma SGS, it's buzzing in trade. Good set of numbers in the first quarter. Revenue beat, margins as well as profitability came ahead of expectations. To break down the numbers, what's the outlook? We're now joined by Mr. Gujral, the managing director at the company. Hi, Mr. Gujral. Good morning. Thanks a lot for joining in. Well, you've had a very, very strong start to the year, sir. 68% growth in terms of revenues, with which is much higher than the earlier guidance of around 30-35%. And your margins as well have improved a little bit because of better product mix. Could you help us out with three broad numbers? One, what is the revised revenue growth target, if at all? What kind of export contribution will be you giving us in terms of absolute revenue and margin outlook? Three broad numbers.
Okay. See, the Q1 has we started on a very strong note, as you said. And this gives us the confidence that we'll not only achieve what we have guided, but we'll be performing better than what we have guided. By what percentage the performance will be better, I think let another quarter pass by. But we are very confident of exceeding our guidance on the revenue and other set of numbers. On the exports, I think it gives us a big satisfaction that while exports last year grew by about 40-odd%, this quarter they have registered a growth of 60%.
Okay.
And with this, we are well on track to achieve the guidance of 1,500 plus crores of export during the year.
Okay, so 1,500 crores, sir, of exports, revenue growth, you're sticking to 35%. You're not upping it, right?
I'm saying it will be better than that. By what percentage? I'm not committing the percentage by what it will be better.
And margins?
But we will be exceeding the guidance.
Margin
also, if my revenue growth goes up, my margins also in absolute numbers should go up.
But 10.5 to 11% is what you're guiding for, right?
Yeah, that's broadly what we are sticking to.
Okay, just one more question from my end. What about a QIP? You just raised money last year. Now again, you want to raise money. Could you tell us what is the rationale behind this? Why are you raising? Break it up for us.
See, this is an enabling resolution. When we had raised the QIP, we had another resolution in place. That resolution is having an expiry. So it's just an enabling resolution that should, in the coming year, in the coming quarters, there be an inorganic opportunity or a new greenfield project which necessitates a fund requirement, it would be triggered for that. For our existing set of businesses which we are into, I reaffirm that we don't require any fundraise. The operational cash flows will be enough to cater to the growth trajectory which we have charted out for ourselves.
Okay, let me squeeze in one final one. Working capital, that's moved up. Why? Could you tell us, what happened in the past quarter? The working capital days as well, I think, has gone up by around 5-8 days. What is the outlook? I believe you're preparing yourself in case things go wrong. You've stacked up some inventory as well. Where does this number stabilize at?
Okay. See, on the demand side, we are very bullish. We don't see any constraint on the demand side. On the supply side, because of the global geopolitical situation, the war, the petroleum refineries being hit in Saudi Arabia, which was a supplier of one of the critical raw materials which go into the PCB, the component lead times have gone up because, again, of shortage of the basic raw material. All this is sort of extending the delivery lead time of the inputs. Now, as a businessman or an industry, we have two choices. Either be lean and let the market suffer, the customer suffer, or take inventory as a strategic investment. Don't take inventory as a plain vanilla working capital figure. For the next 2 to 3 quarters, I think inventory should be viewed from the lens of a strategic investment. And I personally believe that across the industry, not specific to Sirma, across the industry, we will see inventory levels going up a tad bit. Whether they go up by 5 days or 4 days, I can't say today.
Okay, got it.
Right.
Price stabilizes, we have to stock to ensure to cater to the increased growth levels which we are targeting.
All right. Thanks a lot for joining in, sir. With that, we'll let you go. On that, let's go across to a rare television interview that we have. Rahul Bhatia, MD Interglobe Aviation, speaks exclusively to Shireen Ban, outlines IndiGo's domestic and international expansion strategies, explains why India's aviation cost structure must become more competitive.
The industry always gets, again, I use a word and you'll hang on to it, hammered for airfares. And this again something that I think we have not done a good job in educating the world at large. If I gave you the last 3 years statistic, airfares in India, and when I talk about airfares, I'm talking about a portion of the fare that actually belongs to the airlines, has gone up. And this is, if you, the cumulative inflation over the last 3 years has been 12%. With that backdrop, the portion of the fare that belongs to the airlines has gone up between 1 and 3%. UDF charges at airports have gone up to 95%. Landing charges at airports have gone up to 34%. And the reason I make this point is this is not being critical, but I think if we truly want India to become a major global aviation market, I think the whole ecosystem has a responsibility to make sure that we have a cost structure that will allow us to compete. And in that mix also is ATF.
Right, with that, let's get into another earnings conversation. We do have Vinity Saraf Mutreja, Managing Director of Vinity Organics, joining in. The company's revenue in the first quarter grew by about 28%. The EBITDA, however, grew by just 7%. Margins compressed, and the net profit on the back of that grew by about 4.5%. Vinity, thank you so much for joining in. And that really is the first question, because you've guided for 26 to 27% margins for FY27. Now, despite the delay in pricing, or passing on the raw material price hike, are you confident of this 26 to 27% number? What kind of products will be margin drivers for you by the end of this year?
Hear me? Hello, good morning.
Yes, we can hear you.
Okay, great. No, so this quarter, we saw an improvement in the revenue. A lot of that has to, a couple of factors have led to revenue growth. One is, of course, the rupee depreciation. 55% of our revenues do come from export. Also, one significant thing is that the raw material prices increased a lot owing to the Middle East conflict, especially starting in March, April, May. And that, some of it we were able to pass on as price increase. So with that, the volume growth we saw in certain products, such as antioxidants and certain other new products, and that is what led to the revenue growth. Now, consequently, the EBITDA margin did not grow by as much because most of it was just rupee depreciation as well as RMC increasing.
Right, which is why the question, you've guided for 26 to 27% margins by the end of this year, and you're confident of that, right?
Yeah, I think that we should be able to maintain even this quarter. I believe the EBITDA margin is in that range of around 26%. And that is taking into account our entire product mix of ATBS, antioxidants, butyphenols, as well as IBB and other derivatives. And
in the second half of this year, how much would ATBS contribute in terms of extended capacity? Because you've increased capacity from what? 20,000 tons per annum to about 60,000. That and even Viral Organics starts in October 2026. So the second half will have a lot of these new products coming in.
Yeah, so ADBS, we have expanded capacity from 30,000 to 50,000 of the high quality, if that is the metric. We do expect some demand recovery in ADBS starting October. Viral Organics, like I had mentioned, the plant is under re-engineering, which should get completed by December. And we expect more revenue coming in from January. So the second half should be better than the first half. And hence we expect overall, let's say, volume growth, maybe, translating into revenue growth also of at least 15% this year. And consequently, margin EBITDA growth as well.
This particular financial year, how much would be the incremental revenue from the ATBS capacity, and Viral this year would do how much? Because on a steady state, you said could do about 120, 130 crores.
Yeah, so when Viral Organics, the full potential on a steady state at 70-80% capacity utilization will be close to 400-500 crores. But just this year, starting FY 28, if I look at starting March 27, I would expect about 150 crores from Viral Organics itself.
Right.
Okay, all right. Hi, Vinity. Good to see you. Well, another debatable issue which some analysts have written about is about anisole. That's the key raw material for the new product line, I believe. And what they're saying is that it's cheaper when it's imported in comparison to when it's produced in India. Could you tell us what is your take on the situation?
See, yes, anisole we are going to make from phenol, and a lot of and it will always be a make or buy decision. If it is cheaper to import it and buy it, then we will not make it. We will import it, buy it, and then convert it into MEHQ as well as some other products that we are into. And if phenol prices remain low, then we will produce our own anisole. So I don't think that is any factor as such in revenue or EBITDA growth.
All right. Just a final question before we let you go. You've embarked upon a serious capex as well, which is currently still underway. So if you could give us a sense on what your ROCE could decline to once the capex is at its peak, and by when does it start turning, and what the peak could be and by when?
So I think, we are presently at an ROCE of about 15 to 16%. I think once we achieve full capacity utilization of our capex, one can expect improvement in the ROCE, up to 20% after 2 years or 3 years. Having said that, we are making some new investments in downstream products, in some of our forward integration products, in butyl phenols, as well as MEHQ, as well as 4-methoxyacetophenone and a few isoamylene-based derivatives, as well as adding a few antioxidants to our kitty.
Antioxidants, you said, would be how much? And you said that you are also considering new capex. How much would that be roughly in value terms?
So actually, the marginal new capex in antioxidants will not be much. We will start, achieving full capacity. We are already running at a very good run rate. The AO market has improved quite a bit in the last 3 months, and we are seeing realization improvement as well. And at the marginal capex, we will be able to add some new antioxidants, and soon we will be reaching a 20%, 15 to 20% ROCE in the additives business itself.
Yep.
ROCE doesn't go below this 15-16% in the near term as new capacities come on stream before they start to contribute positively, right?
No, because actually most of the capacity capex has already been done. So only thing now, the ROCE can only improve as the utilization increases.
Okay, all right. Thanks very much for joining us, Vinity. Appreciate your time here on CNBC TV 18, and good luck as you continue to execute. We've got 2 listings today, and both have settled. I think I saw one. It settled at a pretty strong premium to the IPO price. That is Indomim. It's an interesting company, and it's basically into metal injection-based manufacturing. It's a specialized way using die casts and injecting metal, taking the cast off, essentially for use for smaller, more complex products. I mean, they supply to aerospace companies, defense companies, and a wide range of end user industries. That's the one which is jumping up 44%. And look at the volumes on top of the IPO price, 700, by the way, on IndoMIM right now. That's very, very solid. I think we have some shots coming through from the exchanges as well. I don't know if we can cut across to it, take a look at what's happening there. Because the bell ringing, of course, happens in about 4 minutes' time. The other one is, yeah, there you go. That's the, I'm not sure that is IndoMIM or the other one.
That's Extranet.
Extranet, the other one, right? So let's just look at that as well, where Extranet is settled at the end of the pre-open. And we will look at, okay, so I think we did see something come up. Maybe look at the other exchange. And the other one, of course, is Lohia, which is also coming up. Yeah, those are the three listings. I think on IndoMIM, that's kind of a presentation or a promo which is going on. But from the exchange, Extranet, of course, you can see visuals, and Lohia Corp, which is coming up with this listing as well. So those are, I mean, a decent start, right? 8.5 on Lohia and about 45% on IndoMIM at this point. So, you know, you will hear from the managements in terms of the forward guidance, etc., post-listing for the first time here on CNBC a little later, especially IndoMIM. Watch out for that conversation at 10:30. MTAR Tech, we want to just go back to it. Stock is up, was up 5%. I think it's off the circuit now, but a one-way fall and some repair this morning. Ria is here. They reported numbers as well. Ria, take it away.
Well, yes, MTAR Tech today has been reacting positively to its Q1 numbers. Now, it has been a strong quarter for them, and it's a beat across the board this time around, and driven by strong execution across all business verticals as well. Now, in terms of the revenue, that is up 130% compared to the previous year versus expectations of nearly 100% rise. EBITDA also up by nearly 200%. Margin seeing a strong expansion of 540 basis points to 23.6% in this quarter. Even the net profit up sharply by 348% to nearly 50 crores in this quarter versus around 11 crores that we saw in Q1 of last year. So overall, it has been a strong performance for them. But what stands out here is the order book. Right now, the current order book is 5,143 crores, which means the company has already surpassed its FY27 order book guidance of 5,000 crores. So today in the earnings call, that will be key to watch whether the management will up the guidance for the full year and what the execution cycle will be as well. And in fact, there's been another update just this morning after the Q1 results were released that the company has received an amended purchase order of nearly 3,000 odd crores. So the incremental order value that comes in from this order is around 820 crore rupees. This is from an existing customer. So this is an additional bump up to the strong order book that the company already has. Apart from this, they have retained the FY27 guidance as well. 80% revenue growth targeted for the year with 24% EBITDA margins. So strong numbers all around. Stock is seeing a gain of nearly 5% today after that 40% fall that we've seen over the last month and a half.
Right, Ria, thanks a lot for that. Up around 5% for that stock after seeing a big decline. With that, let's go across to Sudarshan. Top of the pops right now is Balkrishna Industries, up nearly 10% as we speak. Sudarshan, the street really like these numbers.
It has, and the main reason is the volume surprise that company has given 16% up move with and against an expectation in the range of 10 to 12%, and that has led to a sharp increase in the revenue. Both India and Europe segments have done well in Q1 FY27, and it has outperformed the peers by a huge margin. And the main reason is off-highway truck and off-highway tire, and that segment has been contributing, and it's one of the biggest contributors to the company. And total revenue has seen an increase of 24%. EBITDA has seen a jump of 7%, and despite a sharp increase in the material cost for the entire auto sector, this company margin has seen a dip, but the dip is less in comparison to the peer. Margin has come in at 20.6% versus 23.8%. Volumes, as I've told you, has seen an increase of 16% versus expectation of 10 to 12% increase, and OHT, that is off-highway tires, contributes 90%, and carbon black 10% to the total volumes. Now going forward, company is given a strong outlook for FY30 for off-highway tires and for even for other segments. And overall, they are expecting an increase in the revenue by 2.2 times by FY30. So on the back of strong set of earnings for Q1 FY27 and the strong outlook, you are seeing a big up move in the stock price.
All right, so thanks very much for that, Balkrishna, jumping up as we speak. Now the listings, all three on your screen. And Lohia lists at 461. It's a 10% premium. IndoMIM is at 705. That's a 44% listing. Those are visuals from IndoMIM. And Extranet is the other one, which is starting with a more flattish 2% kind of a pop on top of the listing price. So those are the three listings on your screens right now. So it's a busy primary market day. And more coming up, right? I mean, as soon as the market starts to do a little better, the IPO primary market tab starts. Manipal, for example, is the next big one, which of course is opens the subscription right now and will be listing shortly. So those are the three new listings this morning. As I said, you'll hear from some of these companies here a little later. We'll take a break. We are back. Manisha joins us with the focus on the commodities space. Stay tuned.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
Third, 2026. Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपीएफ संभाल लेगा। आप अपना देख लो।
Welcome back. Let's shift focus to the commodity space now. And oil is once again in focus. If it's not in focus for being down, it's in focus for being up, but it's in focus. Manisha, morning.
Oh, thank you so much for that. Well, absolutely. It continues to be very, very volatile, Prashant. If you look at the last many sessions, a 3 to 4% of a daily movement is becoming a norm for the crude oil prices. And yesterday, it moved nearly 8%. So we saw $90 a barrel on the higher side therein. And with that, when you look at the month of July so far, it's 24% up. For the year, it has gained by 47% as well. So multi-month highs is where we're trading right now. And the crude oil prices, after gaining so strongly overnight yesterday, have seen a bit of a profit taking coming in for the Asian markets right now. I'll tell you why that has happened. But first, the kind of supportive factors that we have seen in case of the crude oil prices. Well, US, for one, has pledged stronger response after attacks on US forces in Jordan. Tehran continues to insist that it wants to have or be the solely control of the Strait of Hormuz. And that is something that the Gulf countries, Oman, Iraq, or US are not, it's not acceptable to them. And then it does feel like that the whole Middle East conflict now seems to be widening, because for the first time ever since this West Asia conflict began, you have Egypt reporting drone strikes on 2 natural gas vessels. They haven't done that before. And then the US crude inventories have declined quite sharply by 7 million barrels in the previous week. This is the largest draw since the month of June. And with this, the US crude inventory is now at the lowest since 2018. Also, when you look at this US strategic petroleum reserve, well, that has been declining as well. So the total inventories have continued to decline, and that stands at a 1983 low. We've seen 18 weeks of constant declines coming in for the strategic petroleum reserves therein. Markets also are looking at Iran-backed Houthi rebels in Yemen threatening to blockade Saudi Arabia. When you look at the overall numbers, well, Saudi Arabia right now seems to be seeking a coalition which they can work with in sense of stopping what's happening in Red Sea at Bab al-Mandeb as well. Market also are looking at the fact that more ships seems to be passing right now via Bab al-Mandeb. If you look at Strait of Hormuz, we have seen a single-digit ship passing therein. Bab al-Mandeb, in the meanwhile, for the month of July, has seen ships passing anywhere between 10 to 15 to 19. But yesterday was 39 ships passing via Bab al-Mandeb Strait, via the Red Sea, and that is what has brought the crude oil prices slightly lower in the Asian markets right now. I also want to quickly tell you about the gold and silver prices, because we've seen a bit of an uptick come in for this one. The US Fed, on expected lines, has left the rates unchanged for a 5th meeting at 3.5 to 3.75%. So you've seen gold prices before the Fed meeting went to below 4,000, but then they went to 4,080 as well. So it has been $100 of a move before and after the Fed in gold. Silver prices similar, $55.50 an ounce is what we saw as a low in the month of July. We are holding at 58 or thereabout right now. $60 an ounce continues to be a stiff resistance when it comes to the silver prices therein as well. And finally, while the US Fed has delivered, the Bank of England and European Central Bank monetary policies meetings in this week is what the street will watch out for.
Okay, all right. Thanks very much, Manisha, for that. So a bunch of cues, what's happening and some of what is lined up. Well, Sensex derivatives, what's happening there this hour? Nigel, take us through it.
Well, that's right. Let's do a quick check then on the derivatives action then. And since it's Sensex weekly expiry that will play out, let's pull up a couple of strikes. Pull up 2 indices first. Both, you have the auto index as well as the tech index, or the BSE ones. Both of them are doing fairly well in today's trading session, and that's the reason why the Nifty is not falling apart. So both those two up 1% and close to around 2% or thereabouts. Moving to the options data, there is some put writing that we're seeing. So even though the markets, opened up a little bit lower, we are seeing a fair bit of action at around the 77,500 put as well as the 78,000 put. We are holding at around 77,700, but the premium on both of them are down. On the 77,500 put, the premium's down to around 430 rupees. It started the day at around 460 rupees. Similar is the case with around the 78,000 put, because out there the premium has moved down by close to around 40 rupees. The last I checked, it was around 680 rupees or thereabouts. So given that there is put writing, I'll tell you where are the support levels. Going by the options data, it's ballpark around 77,100 or thereabouts. And the 20 DMA is the first pit stop. That's at around 77,250. The screen is telling you maybe this trend is still up, but volatility will pick up in the final hour of trade since it's weekly expiry as well. So watch out for that. For the time being, though, we'll slip into a short break. But on the other side, our special segment, it's the economy. Lata will be discussing what the Fed did overnight and what's the trajectory ahead. Stay tuned.
Third, 2026. Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
मनी 3rd, 2026. Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.
Juniper Green Energy Limited proposes an initial public offering of its equity shares. The 100% book build issue is being issued at a price band of rupees 214 to rupees 225 per equity share of face value of rupees 10 each. Issue opens on Thursday, July 30th, 2026. Issue closes on Monday, August 3, 2026. For risk involved and other details, please refer to the Red Herring Prospectus, which is available on the websites of the company, the SEBI, the BRLMs, and the stock exchanges.
Well, the big story for the economy is the Fed's pause. The Fed's pause actually did not surprise the equity markets or the bond markets. What really led to the huge equity sell-off and the big jump in yields in the bond markets was the Fed chair Kevin Warsh's press conference. To understand the press conference better, I have with me the undoubted expert of economy, US economy and global economy, Jahangir Aziz, co-head macroeconomics research at JP Morgan. Jahangir, thank you very much indeed for staying up so late for us. We have had this much awaited, historic press conference, if you may say, from Kevin Warsh. What was your takeaway from that press conference, and how many hikes do you see after that chat?
As far as the statement is concerned, it was more or less the same as the previous statement. The only difference was that there were 3 dissent, and the market had 2 dissent in mind. I think Neil Kashkari was the surprise element. So I think as far as the statement is concerned, it wasn't that much of a difference from what the market was anticipating. And if you look at what was happening to 10-year at that point in time, it was very well behaved. I think what happened was the press conference. I think in the press conference, Kevin Warsh wasn't able to convince or have a credible view, on what is it that the Fed could do to bring down inflation, number one. Number two, even on the question of on the 2% inflation target, he did not really give us a sense that the 2% inflation target based on the PCE will continue to be the target. All he said was that, well, that's what has been happening in the past, and that's what we have at this point in time. And then he immediately pivoted to the 5 different working groups, and therefore the inference that the market got was that despite all the talk about keeping price stability, etc., 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 he didn't really have a very concrete way of articulating what he would do, what would be the target. And even when he was given pretty easy questions as to if inflation keeps going up, don't you think the interest rate hike would be the necessary instrument, he sort of backed off from it. So I think by the time the press conference ended, there was a lot of confusion as to what exactly is Kevin Warsh's views about inflation, views about monetary policy, where he wants to go with it. And you could see that in the market pricing, right? I mean, just before the press conference, the market was sort of pricing for September, was sort of pricing almost 75% of at least 1 hike, maybe 2 hikes, and a very 25% of people believe that it was going to hold. By the time the press conference ended, the number of people and the percentage of people on hold went from around 25% to about 45%, and the number of people who thought that it was going to be a hike went down from around 70% to 55%. So I think, and of course you saw the 10-year steepen, almost 12, 15 basis points.
Yeah, Walsh also said that he will watch the markets. He asked the Fed to watch the markets. So how do you think this 30-year yield going to 5.12, the highest since 2007, impact the Fed? How many rate hikes do you see, for instance?
I think what happened today makes us believe that, look, parts of the FOMC will start to think about bringing the hike closer. And as you know, FOMC is not one person's committee. It is a committee where the majority view actually holds. And I think that our view is that, look, by December, the majority of the FOMC will move towards a hike. And so we do have a hike in December. Is there a September hike, right? And that's where really the question is. And I think if you get a bad inflation number, now remember the last inflation number, because of what happened to energy prices, was actually very, very soft. More importantly, the core inflation was soft. Now that could very easily reverse. So if we do get a nasty inflation number between now and then, I think even September is a live meeting. But right now we are looking at December hike probably is where most of the FOMC will push the rate hike to.
Okay. Let me move to the equity markets now. As we all know, the chip stocks have fallen very sharply, and markets are also worried about the huge loans and guarantees raised by the LLM companies, AI companies. Do you think there can be defaults or something very disruptive in the credit market or the equity market?
I don't think that this idea that these hyperscalers and the entire AI complex will need to continue to have very large investments is the one that is driving it. I think what is driving is that we all said, I'm using the word collective we, that we all said that, look, you don't really need to worry about the valuations of these companies because look at the forward Ps. That the forward Ps justify these valuations. So on a forward PE basis, they were not looking overvalued. The question that was asked and has been increasingly asked is the forward earnings being overestimated? And that's where I think the questions are being raised, that look, we really require the users of AI to continue to spend significant amount of resources and pay higher fees and higher token charges in order for this entire thing to be justified. And that brings you to the big question that users will pay that provided they see reasonable productivity gains. At this point in time, we haven't really seen those productivity gains. We believe that there will be productivity gains. It's like no one wants to kill the goose that will lay the golden eggs, right? So that's what we're all afraid of. And I think that's where the question is, that you require significant. So we wrote a note, not we, JP Morgan wrote a note, I think about a month back, about what is the amount of revenue that the AI complex needs to generate in order to get a rate of a 10% ROI. And it turns out to be about $800 billion. Now, you really have to think hard as to where that $800 billion of revenue will come. And I think that's where the question is.
Fair point. Okay, now let me come to India. If the Fed hikes in September or in December, as you say, doesn't the interest rate differential argument become very strong? Then does the RBI MPC have to raise rates?
Look, I think the interest rate differential hedged is actually a negative carry at this point, and then it has been a negative carry for a while. So I don't think that the interest rate differential argument is anything new, right? That 25 basis points of rate hike by the Fed is really going to do very much. If you look at the 10-year has already moved more than 25 basis points over the last month or so, right? So the interest rate differential, the negative carry has worsened because the forward, the future price INR, dollar INR rates haven't moved that much. So you're already negative carry. I think the question is, does the RBI look at the rise in the 10-year rate or the expectation of market pricing of Fed rate hikes, and look at the impact of that on financial conditions in India, and then react to it? Now, in the past, the RBI has tried really hard not to tie the two things up, and more than concerns about the depreciation pressures on the exchange rate, they have really tried very hard to de-link India rate hikes with that of the Fed, and to a large extent they have been successful in de-linking the two of them, right? So the question then becomes is that as the 10-year moves up, do we see pressures on the dollar? Does the dollar strengthen? And does the strengthening of the dollar then spill over into pressures on the exchange rate? And does the RBI react to it? Reaction of the RBI through an interest rate hike to defend the exchange rate will be seen as going back against what they've always said, that they do not use the interest rate to defend the currency. They have been very, very, they've tried their best to make that argument. Now, there is an argument, there is a hope, and then there's reality. Okay. My guess is that if the dollar does not strengthen disruptively, and if, let's say, it's not combined with another spike in oil prices, the current account remains broadly, where it is right now, I don't think the pressure will be such that they will be forced to use interest rate as a defense mechanism. And I think that's how we are looking at it, right? Okay. That, it is probably going to be the last instrument that they use. Something like in 2013, they'll probably exhaust other instruments before they use interest rate to defend the currency.
Okay. All right. The Fed's rate hikes will not influence the RBI MPC so much, but the dollar will. Do you see the dollar strengthening if the Fed were to hike? At the moment it's at 101, the dollar DXY, I mean. Suppose it goes to 105. Do you see it going there?
No, we do see some dollar strengthening taking place, but if the concerns again rise on policy making and institutions within the US, this time around, it isn't that people are from the White House are raising concerns about the independence of the Fed. This is Fed basically creating its own problems by making statements that question its own credibility. Then obviously the dollar isn't going to move up. But broadly, we do see some dollar strength going forward. Nothing that would be disruptive, and most of that is on the back of a very strident private sector and an equity market drawing a lot of capital.
Okay, what is your take on whether India growth story can surprise on the upside? I'm asking because there is this huge capex cycle in Asia and in fact world over. It is having an impact on India's exports. For instance, April-May exports were up 15%. That's Q1. So do you think, how does India growth story pan out for you?
So let me start with 2Q, right? Look, 2Q is going to be a disappointment. Whether that disappointment is real or a result of a statistical methodology, but we don't know. If CSO continues to use the same methodology that is used since 2012, then simply because oil prices moved up, wholesale prices will move up, and therefore that will have a large negative impact on 2Q GDP number. Now, is that real, or will it really be felt on the ground? Look, oil prices at the consumer level did not move up. We know that the government actually put a ceiling on it. Gas prices moved up only marginally. So I think that the actual impact of the oil price increases is largely been felt in the current account and the rupee. It wasn't really felt at the level of households or corporates, etc. India did not see the kind of shortages that people were afraid of that they would see shortages. So I don't think that the real real economy actually has been that damaged. The damage has been on the exchange rate and on the fiscal front. Now, because of the methodology, you'll probably see it in headline GDP numbers, right? So it's hard to say that. Now, turning back to your actual question, is there a spillover that is taking place from the Asian capex cycle onto India? I doubt that. If you look at the capex cycle in Asia, whether you're looking at Taiwan or you're looking at Singapore or you're looking at Korea, it is primarily a tech cycle. It is, and in some instances, like in Thailand, etc., there is some amount of that taking place through the build out of data centers. I don't really think that the amount of data centers that are being planned in India, etc., is really going to spark an actual investment cycle. We go back to the old problem. The problem that has plagued India since 2011 is that corporate investment, sometimes shows signs of life, but it's very, very brief, and that sign of life very, very quickly goes away. It hasn't really moved out of that band. And again, I think there are other reasons rather than cyclical reasons such as a tech cycle boom or exports going up here and there, or reforms in GST or the banking sector problem that we have thrown at is really the problem behind why corporate investment has flatlined.
Okay, I get it. Not very, very optimistic on a big India growth number. Thank you very much, Jahangir Aziz, for joining us and for staying up so late for us. Thanks a lot. We have to wrap up on Bazaar. Market still a little bit under the weather, in fact, off the highs. We will wrap up on Bazaar. Chartbusters will take the action forward.
Last month.
We are over, Jimmy.
Hey, लाइफ में स्क्रैचेस तो आएंगे। गाड़ी के स्क्रैचेस को तो कॉस्मो पीपी अब संभाल लेगा। आप अपना देख लो।
Some properties are not just homes. They are statements, achievements, legacies. At India Sotheby's International Realty, we represent the country's most exceptional properties with unmatched expertise. Unique homes, uniquely for you.
(2026) Available on the websites of the SEBI, the stock exchanges, the book running lead managers, and the company.